Hi everyone, Woody back on the CPA Wealth Advisors YouTube channel show. So I'm continuing. Here's show number 2, another Woody's Goodies. I want you to be really honest with yourself throughout this particular show. It's really important because many of us, I'm speaking for myself, cannot really self-manage my own high-growth portfolio. Can't do it. I hope this show explains why. So, today's Woody's Goodies, the ultimate guide to building a high-growth portfolio. Welcome back. As I said, today I'm going to delve deep into the world of investments, but I'm going to discuss how to build a growth portfolio. And I think our financial advisors are the best at this. This is where they really excel. This is their specialty. If you're someone who's interested in taking on a bit more risk for the possibility of greater returns, then this is the right place for you. But you have to be able to accept the ups and downs. It's easy to say, hard to do. And let me go over a few things. The growth stocks or a growth managed mutual fund, that can be a valuable part of your overall investment strategy. And these growth stocks, they have capital appreciation as their primary goal, with little or no dividend payout to be expected. Okay, that's not their goal. A growth portfolio would consist of companies, I would call it with above average growth, that reinvest their earnings in expansion and acquisition and research and development. The opportunity for higher potential appreciation naturally comes with above average risk. Hear that and understand that. You have higher risk. And they are often tech companies. We see that a lot. But they can be from any sector, really. The key is that they are expected to grow at an above average rate compared to other companies in the market. That comes with more risk. Your portfolio is going to be like this. It's not going to be like this. You're going to love it on the up times. You're going to maybe get really nervous on the down times. If you're going to bail out and pull out at the down times, don't invest in growth. That means you can't do it. Or by doing it with an investment advisor that's holding the course for you. They hold on. They understand the journey ahead. That's really important. Now, before I kick off, let's see if you're the right candidate for growth investing. So, are you someone who can tolerate, number one, can tolerate a high level of risk? I'll put this on the screen. I'm going to put these characteristics on the screen because I want you to read them and be honest with yourself. Or do you need somebody to hold your hand to keep you on this course? Number 2, are you willing to lose some or all of your investment in exchange for potential greater returns? Honest. Be honest. 3, it has a long-term investment horizon. I would add to that, at least you're going to leave your money in there for 10 years or more. Do not invest in a growth portfolio if you do not have a 10-year horizon before you're going to touch that money. And 4, you do not require a dividend income. You don't require distributions or income from this portfolio. If you meet those characteristics, then you might be a growth investor. Now, the steps to building a growth portfolio. I'm going to list these. You have to follow these steps, or let our financial advisors do it for you. They do it for me. I cannot do this. I told you at the beginning of the show, I don't have the discipline. I don't have the time. You have to watch this stuff every single day. Number one, you have to identify your financial goals. And many people don't understand even what that means. So you need to have somebody sit down with you, which we will do for free. That's why I have my email on there. Just email me. I'll set you up an appointment with our chosen investment advisors, and they will build you this plan. So identify your financial goals, whether it's for retirement, buying a house, a dream vacation. Having a clear goal can guide your investment decisions. Very, very important. Number two, you must diversify. Do not put all your eggs in one basket. A diversified portfolio has to include a mix of different types of assets and asset classes. So if I just got through telling you you're going to invest, that this is all about investing in a growth portfolio, how do you diversify within a growth portfolio? Tricky, but doable. Number three, research. Are you really going to do the research? Look for companies that have the potential for high growth. Check their earnings growth, the industry trends, market potential. That includes a fund. Research it, or be honest with yourself. Let an investment advisor do it for you, because they're going to do this. They've done it for me. They've done great. 4, this is the hardest one. So I'm pausing for a second. Monitor regularly. You need to keep an eye on your investments and the market conditions and be ready to adjust your portfolio when needed. I watch my investment advisors adjust my portfolio. I see movement and changes, and I'm feeling great that I don't have to do that. So, building a growth portfolio, it can be an exciting journey, but it requires patience, discipline, and a very good understanding of your own risk tolerance. And always remember to do your own research, or by all means, consult with a financial advisor. It's really, really important that you do that. Now, I hope you found this show informative. It's brief, it's to the point, and please give me a like and hit subscribe. Spread the word for more finance insights. I have some amazing shows written. Until then, stay disciplined, stay the course, and let me introduce you to our financial advisors. They will build you a growth portfolio for free. And they'll manage it. They charge you an investment management fee, but it's aligned with your interests. No commissions. So they're not incentivized by churning your portfolio. They make more when you make more. They have a fiduciary duty as registered investment advisors to have your interest as their number one priority. They're great. We are based here out of Atlanta. You can meet with them either on Zoom or Teams or in person. And I think you're going to walk away from that meeting with great tax ideas, because they're CPAs, they're certified financial advisors, they're certified financial planners. So they're going to sit down with you. You can bring in your tax returns, you can bring in your investment statements, and they're going to build out a plan thinking about these things that I just discussed in this video. I would love to introduce you to them. Woody at CPA, the number 4, the word wealth.com. Woody at CPA4wealth.com. That's how you will reach me. You will email me. I'll introduce you to them. I'll try to be at the Zoom meeting, but I can't be at them all these days. But you don't need me. They're great. They manage my money, so I certainly think they're much more qualified than me. But I do know that these high-level characteristics of what it takes to be a growth investor and how to build that portfolio, those are the things I know are important. And then I just turn to the best, in my opinion, to do it for me. I hope you enjoyed the show. Many more to come. Be honest with yourself. Read these characteristics. Read these things I've put in this video. You'll thank me. Woody at CPAforwealth.com. Thanks for watching the show. I'm excited to be back. And I'll see you on the next one. Bye, everybody.